welcome back to my YouTube channel. Welcome back. Today we are receiving more bad news coming out from the crypto market. A lot of stuff for us to cover because as of right now, recession concerns are at all-time high, and many American people are now wondering whether or not they will be the next victim in line to be laid off by the employer. So not only looking from the United States alone, we are now looking from the global economy overall, which we are seeing an economic slowdown globally. And investors are leaving their local currency and are now purchasing the US dollar. The US dollar managed to hit 2-decade high. This is mean that global investors are very confident in the stability and sustainability of the US economic infrastructure. They are exiting their local currency because they are fearing of an economic turmoil within their region. So US dollar has hit 2-decade high. This is very awesome, folks. So after Fed Reserve Chairman Jerome Powell commented that the central bank will continue to tackle inflation, forcibly signaling further interest rate hike. That is what we are expecting. We are expecting for another 75 basic point. But what is really awesome is that the dollar index had hit 20-year high. This is phenomenal, folks. So the power of the dollar is on the rise and the power of the euro is declining. Despite that, we have seen the dollar is that many global investors are preferring to have dollar on hand. So they say a stronger dollar is bad news for the stock market, as around 30% of the revenue earned by S&P 500 company is from market outside the US. And this is what we are seeing. However, the dollar is still strong. This is still great. Hit 20-year high. This is awesome with the power of the dollar. But what we are seeing is that the US has import more than its export. In June, it had a trade deficit of $79.6 billion. We are going to continue to see Powell saying, hey, that there will be more big rate hike ahead, and people are not preparing for that sentiment because many people don't like big rate hike. They tend less to borrow money as a result of high interest rate. So that's what we are still seeing. There's still a lot of metrics out there. Let's talk about this. Bitcoin fall to $19,600 per Bitcoin as investors continue to move, Fed chair comment. So recession concerns are at all-time high, and many people are worrying of being laid off by the employer. We are now hearing many companies are now implementing layoff, and that is still on the rise despite we have a strong market. So there's still a lot of complexity when the issue very broad to talk about and very complex to understand the full magnitude of such event. However, we have seen Bitcoin and Ether had traded down over the weekend, really underperformed the crypto market as crypto pulled back below $20,000. So that's what we are seeing. $20,000 to remain one of the more crucial support level. And as of right now, we are still waiting on investor sentiment, whether or not they are very confident with the market. But with Federal Reserve Chairman latest comment really stir up a recession concern. That is what we are still seeing. Let's look forward. Goldman Sachs say, hey, the world is at an inflection point and it's time for a new investment playbook. So they are trying to get ready for this next bear move because this bear run is going to cost investors billion of dollars. So that's what we are seeing. Recession concerns are at all-time high, and many people are still worried of being laid off by the employer as momentum continue to grow. So let's move forward. Robert Kiyosaki just say, hey guys, we are expecting the next 2008 recession coming, and this one is going to hurt. Painful hurt. So he is expecting the real estate sector, the stock market, the gold, silver, Bitcoin market are gonna crash. And we are gonna see millions of dollars will be wiped out from the market. I think it won't be million, it will be trillion of dollars. So the crypto market will wipe out like billion of dollars. And we have seen how significant bear market that it can drag. So recession concern are mounting, and people are fearing of the next 2008 financial crisis or the 2000 dot-com bubble, which is way worse than the 2008 crisis. And he expecting this market will crash as a result of tighter monetary policy that is being enforced by the Federal Reserve, and we are preparing this mindset. Well, so that's what we are seeing. And let's look forward. Let's look forward. Kiyosaki described in a tweet Friday that every market is crashing and the middle class will be wiped out by higher oil inflation. We have seen Buffett invested billion of dollars into Occidental Petroleum, so he is very confident in the gasoline market. And we have seen how crude oil has gone up significantly during the Ukraine and Russian crisis, and now crude oil is on the decline. However, there's still that slight chance of recovery, bouncing above $100. So there's still a lot of stuff to talk about, a lot of ambiguity within the market. So a very great area to talk. Let's look forward. We still have more stuff coming out. The S&P 500 is bracing for more pain in September. People now wonder whether the next market in September will perform very, very low here. So we did underperform in the month of August. We have seen how crypto performed, how the stock market performed. So after they made massive rebound, we have seen significant crash as a result of Powell commitment to higher interest rate. So we are still bracing for a possibility of the U.S. entering a recession, raising many red flags for investors and many alert for the American people, very wondering recession concern. Let's look forward, folks. So let's hear from European Central Bank. So they say from the Central Bank from Europe. So right now they say the European Central Bank Board member Isabel Schnabel saying on Saturday that, hey, tighter monetary policy is necessary, even if the European economy enter a recession. We do not care. Our main goal is right now is to tame inflation. Same and very familiar with Fed Chairman Powell. So they say, hey, U.S. Central Bank raised interest rate by another 75 basis point, and we are expecting another 75 basis point in a formal meeting in September. So there's still a lot of stuff going on with more commitment to tighten monetary policy, and we are going to see the risk and the chance of the U.S. entering a recession is very, very high. And even when the European market, we have seen how the natural gas market had hurt the European people, where right now for the price of gas has gone up significantly, especially natural gas. So there's still a lot of concept to talk about, and winter is coming up. Natural gas is on demand within Europe, and Europe is trying to find another source of supplier to supply them natural gas because that is what they need. So there's still a lot of stuff going along, and many metrics are now being analyzed by the market to understand the full magnitude of it. So last but not least, folks, we have to talk about rent. Inflation has hit the American people. It has hurt the American people financially speaking, and rent price is still number one American concern. So let's look forward. We are seeing rent price has gone up significantly. And right now, let's look. The Zumba National Rent Index has seen a significant increase for one bedroom rent from the start at $1,400 up to 11.8% over August 2021. So being last month record high, more than half of U.S. cities are showing double-digit rent hike with some over 30%. So this is real concern for uncontrollable rent hike is what worry the American people, and this is what we are seeing, folks. So there's still a lot of stuff to talk about, and let's look forward with New York. New York tends to be one of those highest rent price that we have seen significant jump within New York. And here is our latest chart coming out from most expensive rent as the month of August 2022. New York ranked in first place, San Francisco, San Jose, Boston, San Diego, Miami, Los Angeles, Washington, D.C. New York is nearing that $400 per month here. So that is just for one single bedroom. This is what we are seeing according to Zumber Incorporation. Latest data coming out from the market. And then what are my thoughts with the stock market as of now? So with tighter monetary policy coming along, we're going to continue to see stricter, and the market gonna see this significant bear market, and we are expecting the worst for the worst to happen. So bear market is possibly high, and the possibility of the U.S. entering a recession is significantly high here, as recession concerns are mounting at all-time high. So that's what we're seeing. And then if you enjoy watching my video, please click that subscribe button, and also don't forget to click that like button. Thank you, everyone. Have a nice day.